under the theme Local Youth Actions for SDGs and Beyond. This webinar session is not just a webinar. It is a webinar that is standing on very strong foundations that have just recently been made. I know John will later on brief us about the landmark Fourth Financing and Development Conference that happened last month in Sevilla, Spain, where the world leaders pledged to build uh, inclusive tax frameworks that reduce compliance burdens and restore multilateral systems. I know John will be here to tell us more about that, but my name is Gabriel Achai, and I'm speaking live from the East Africa Law Society Secretariat in Arusha, Tanzania. Karibu sana. Thank you for joining this webinar session this afternoon. If you have a friend that has not yet joined, please share that link. Let's get sharing. We are streaming this session live on YouTube and Twitter. So we hope that we have a very wonderful, wonderful, wonderful time together this afternoon. So our topic today, disputing the bill, rethinking the burden of proof in tax disputes and revenue dialogue, may sound a bit technical at first, but at its core, it's about trust. Trust between citizens and their governments, trust between businesses and revenue authorities, and that trust that rules the game are clear and fairly applied. So today, as we discuss this session, it's not about statutes and case law. It's about real people, real challenges, and how we shape systems that are just, transparent, and workable for all. I'm glad that this session is being moderated by my very good friend, a man that I've known for quite a while, my good friend, Mr. John Kafko. One key thing about this gentleman, I met him while I was at law school in Lumumba, and he's an exceptional chess player. He always beat me at chess, but currently he serves as a programs manager at Youth for Tax Justice Network and has been at the forefront of initiatives that promote fair and equitable tax systems with special focus on empowering young people and marginalized communities to engage meaningfully in tax justice conversations. Mr. Kafko, it's a profound honor to once again see you and host you at this platform, and I'll give it over to you. Take us for the next 2 hours and until 4 p.m. Thank you.
Thank you very much, Gabriel. It's really an honor to be here and to work with the East Africa Law Society once again, and I'm very glad to be with you here. Ladies and gentlemen, distinguished panelists and colleagues across East Africa and Africa, you're very much welcome. Thank you for joining in. Thank you for coming to share your thoughts and what you think about this topic, disputing the bill, issues around dispute resolutions. I mean, we all know that of recent, revenue mobilization has become a big concern in our countries, especially now that our governments need money to finance different priority sectors in our country. So revenue mobilization has been very, very important, but there always is that problem between the taxpayer and the taxman, who is always aiming at hitting their targets, as we always know them. You know, every year there are targets which the revenue authorities are given. So how do we balance this? So I'm very, very glad that we are here. And just again to continue from where Gabriel stopped, today is very significant because today is International Youth Day. We are talking about SDGs, but we all know that SDGs, to realize our SDGs, we need the finances at the end of it all. For health to make health work for all of us, we need the finances. To make education work for all of us, we need the finances. To make technology, infrastructure, and all that work for us, we need the finances. And this webinar is also very significant at this moment because as we speak now, there are negotiations that are happening in New York on the UN tax convention. I don't know how many of us have heard of it, but this tax convention is going to be a global one, centered at the UN, and all our countries are involved in this process. And simultaneously, a protocol on cross-border taxing services cross-border, especially digital services, which are handled cross-border, is also happening at the same time. But also there is a protocol on dispute resolution, which is being negotiated at the moment. So we as well, through this webinar, we want to make input into those negotiations to ensure that some of the issues we are putting out right now come out in that convention, which is going to be a global one. So it is very important, but also we all know that towards the end of June, there was the Financing for Development Conference, which happened in Seville. For those of us who joined in, there, global leaders also met and committed to some issues, especially around having inclusive tax frameworks that reduce compliance burdens. And all this is very, very relevant for today's conversation, ladies and gentlemen. So I welcome you so much. And with me, I have a distinguished panel of very experienced ladies and gentlemen who are going to share with us on this topic today. And I urge you, the audience, please listen carefully in case you have any questions, any comments, and they are burning, especially try to use the comment section, put them down, I'll note them down. Also, we shall have an opportunity to speak. We shall give an opportunity to talk and share. So we are planning to leave by 4, so I want us to keep time. Each of our panelists is going to take about 10 to 12 minutes. So I'm hoping that we shall stick to that timeline. And yeah, after when we get into the Q&A session, I'll invite you, the attendees, to raise up your hands. But as the conversations are ongoing, please feel free to type in the chat your comments, your questions, and everything. So once again, thank you very much. My name once again is John Kafko, and I'm a programs manager at Youth for Tax Justice Network, and I'm going to be your moderator for today. I'm very, very happy, and I'm very, very much looking forward for fruitful deliberations. And now getting into my panel, I'm going to start with Dr. Bozire. Dr. Bozire is a lecturer at University of Nairobi, and he also works with the Center for Physical Studies in Nairobi. So I'm very glad he's going to share information about dispute resolution. And yeah, I can't wait to hear from you, Doctor. Can you hear me, Doctor, please?
Yes, John, I can hear you.
Yes, please, the floor is yours.
I can hear you, the youth leader, the leader of tomorrow. Or are you the leader of today?
No, the leader of today. We are already
Yeah.
leading.
So yes. So so I'll talk. I mean, I'll said I don't have a PowerPoint presentation, but I'll talk to topic for the topic for today. So now, one thing about tax law is sometimes it is treated as being very unique among the legal or subjects that we normally have, even from a policy perspective. So, for instance, when you go to court and you are seeking an interpretation of a tax statute, you'll be told that you need to follow the strict interpretation rule for for statutes. That position does not stand with the other statutes. Of course, I'm also aware that some countries, through the courts, have allowed the introduction of other rules of interpretation of tax statutes. So, for instance, what is called the purposive rule. But when I look at cases around East Africa, then is the strict interpretation. That uniqueness, in some respects, not always, also finds its way when it comes to tax disputes. It finds its way when it comes to tax disputes. Of course, tax disputes have been increasing They have been increasing, and we are going to have more. Because part of the increase has been brought about by legal changes. So, for instance, in Kenya, the introduction of the constitution in 2010 fueled the rise of very many tax disputes. If you go across the region, especially Tanzania, Uganda, there are very many tax disputes, was caused by increasing enforcement of tax laws by the tax administrators, the need for more revenue to provide for economic and social goods. So the government needs more money, and the main sources is taxes. And of course, as John, you've mentioned, you've spoken about negotiations going on in New York for the UN Convention on Tax. So the litany, the flurry of changes on the international landscape have also found way to our shores. So many changes in our tax laws annually to factor in the reforms that are taking place on the international landscape and also on the domestic front. So all these and others have had an effect on the tax disputes resolution system. But then coming to today's issue, then you find one of the issues that arises when it comes to tax disputes is the issue of the burden of proof. The issue of the burden of proof. The question is who has to prove an issue that has arisen in a dispute between taxpayers and the tax administrators. We know lawyers from criminal law. If you read the Evidence Act, which we have across the region, it says whoever asserts proves. So if you assert, you're supposed to prove. So if it's criminal law, the prosecution has the burden of proving the commission of an offense. Of course, there may be situations when this burden is shifted. For instance, when the accused comes up with an alibi. So if there's an alibi, then the burden of proof will shift. Now, when it comes to taxation, then unlike what we have in the Evidence Act, which applies to criminal law, to civil law, then the law says the burden of proof is normally, when there is an assessment, is on the taxpayer. The burden of proof is normally on the taxpayer. So the Tax Procedure Act in Kenya, the Tax Administration Act in Tanzania, the Tax Procedure Code in Uganda, the tax procedures laws in Rwanda have that particular provision. So it's also found in some of the provisions relating to the tax appeals, to the Tax Appeals Tribunal. And the disputes that have gone to courts, the courts have emphasized the issue of burden of proof resting on the taxpayer. So the question is why? Why do we have this? And what are the implications, especially for taxpayers? Do taxpayers have a recourse when such an issue arises? If you look at the genesis of the burden of proof in tax cases, the argument is that taxpayers are the ones who are in possession of the information. They're the ones who have the records. They have the information about their tax affairs. And because of that, it is argued, then it is the taxpayers who have the burden of discharging that particular burden. Of course, there have been challenges. There have been challenges to that particular position, but they don't seem to have gained much traction. So I'm aware in Kenya, there's a case called Ayesi, Robert Ayesi versus KRA, where the taxpayer went to court and they were saying that the provisions that provide for the burden of proof beyond taxpayers is unconstitutional. It was argued. But unfortunately, when you read the judgment, the court didn't make a finding on that particular issue. I'm aware the case went to the Court of Appeal, but unfortunately, Ayesi, uh, you know, uh, passed on. So it would have been extremely, very helpful. So that means that is really the position we have, we have around. But then, of course, are there circumstances when uh, there's an exception or when there can be digression from this principle, which has become a provision in the law. So it is in the statutes. So we've had some cases in Kenya. If I can speak about Kenya, where the court has, in some
Hello, doctor.
disprove
Hello, doctor.
sorry, my call dropped. Uh, dropped. Can you hear me, John?
Yes, yes, yes. Yeah, we
Yeah,
can
I'm
now hear
back.
you.
Sorry about that.
Yeah.
So when it comes to documentation, then the burden can shift to the tax administrators to prove whether the documents produced by taxpayers are valid or they are not valid. So then if the tax administrators can again prove that the documents are proven that the documents are not genuine, then you find again the burden of proof shifts. So it swings like a pendulum, like a pendulum. So that there are also circumstances, in spite of the statutory provisions and depending on the circumstances that are before the courts, then you may find the burden of proof really swinging between the tax administrators and the taxpayers until that issue is resolved by the courts. Now, the interesting, if you look at the Rwanda tax procedure laws, very, very interesting. So they even set out when the burden of proof shifts to tax, administrators. And I think it's the only law I've seen from the East African region where the law states when the burden of proof can actually shift to the tax administrators. So they say, for instance, the tax administrators, the burden shifts. The tax administrators, if they are rectifying the declaration of a taxpayer, so if they rectify the documentation of a taxpayer, then you'll find the burden shifts to, really shifts to them. Now, this issue of course, burden, so it is there and it is in the law, but it also poses challenges for taxpayers, especially with the technological changes that are taking places. because the tax systems in the region are being automated as it happens worldwide. So I've seen a case where in Kenya uh, we use what is called an I-tax system to apply for registration as taxpayers and use it for communication between tax authorities and taxpayers for a number of issues, where the tax authorities send a notice or communication. And a taxpayer comes and says, I've not seen the communication because I'm not logged in to my tax system for a number of months. And of course, this can be justifiable if you're an employee who relies on the monthly salary. So you pay as you earn. You will probably be interested in accessing the tax system when you want to file your annual tax return. At the end of at the end of the year. So it's highly likely that you may miss, such communication. Then, of course, even this technology, if you look at it from an equity perspective, is not equitably, if I can use that word, accessible by all the taxpayers that we have in the country. So take, for instance, a fellow who wants to open a bank account because they have to receive money from their sons in Texas in the USA. So they'll go to an internet cafe and get a PIN, but they may not know that at the end of the year they're supposed to file a return. But then at the end of the year, if they don't file the return, they are going to be taxed. There are going to be tax penalties. So an issue would possibly arise that I don't know this and don't know about technology and all that. So there is also the issue of course, requiring now more education, especially when people are getting into the tax system. Uh, so really, in conclusion, these tax disputes are going to be with us. They're going to increase, especially considering that if I speak for the three original East African countries, Uganda, Kenya, and Tanzania, there are a lot of disputes in the 1960s and 1970s. Then they tapered off, for about 3 decades. But now they are making a comeback because there are now so many issues that have to be settled by the courts. So that points to an arena that is going to be busy for the next decade uh, or so, and perhaps then it will settle, later. Because now you find in, some advanced countries, they can go for a whole week, no tax decision comes from their courts because they have really been having this ongoing for long. So as tax practitioners, tax professionals, this is really an area we've keen on, keep be keen on, and keep working on. And, John, so well, that is my very brief remarks about this subject.
Yes, thank you very much, Doctor. You raise very, very important points, advancement in technology, but also that case where you talk about where someone challenged the constitutionality of the burden of proof. Doctor, just before I move on to the next panelist, just something very small. Do you think this is something, especially in light of the negotiations that are happening in the New York uh, around the burden of proof? Do you think this is something that should be or the protocol on dispute resolution should pronounce itself on the UN Tax Convention Protocol?
I think beyond the UN, of course, the UN Convention focuses on the cross-border issues, the issues that happen across the countries. And of course, dispute resolution is a key aspect of disputes across the borders. Remember the base erosion and profit shifting project, Action 14 has a report on, disputes resolutions. So of course there are discussions on coming up with a framework to handle issues across across the border. Then again, when it comes across the border, of course, whether it's going to be between governments, or is it going to be between governments and taxpayers, and you is involved in governance issues, know that from this side of the world, we'd want them to be between governments, not between governments and taxpayers. Because of our experience with bilateral, investment treaties, I don't see the issue of burden because it tends to be domestic. However, there will be other issues that will arise when you have that about, for instance, about fairness, about inclusiveness. That's my thinking when it comes to the international dimension of this.
Thank you very much, Doctor, for that. I think I do appreciate that. I think that is one of the things that is being spoken about in New York, especially should the convention should it stick to the country to country, or should it also be brought down to domestic level? Should it stick to the global level or to the domestic level? So thank you very much, Doctor, for those insights. Quickly, I'm going to move on to Miss Wangoi Karuga. She is going to speak about the ruling in Uganda Revenue Authority versus Diamond Trust Bank. It was delivered in 2021. And that one in Hassan Ali, Republic versus Hassan Ali. And these rulings have all redefined evidentially standards in tax and customs districts. So, Ms. Wangoi, please. To our audience, please, in case you have any question, please put it in the chat. I'll be reading it when we get into the Q&A section. Thank you. Please, Ms. Wangoi.
Thank you very much. Let me just get my slides to the beginning. Yes, thank you very much, John. It's a pleasure to be in this webinar this afternoon. Good afternoon, participants from wherever you are tuning in and listening from. My name is Wangoi Karuga. I'm a member of the East Africa Law Society of Kenya and a member of the Law Society of Kenya. And I am a tax partner in a firm practicing in Kenya called MAK and Partners Advocates. My area of specialization is tax, with a particular focus on tax dispute resolution. My role today will be to discuss precedents from various East African courts, especially with a focus on the ruling from a Ugandan court and the Tanzanian court. And I will shed light on how the burden of proof has evolved over time, applying those two precedents. And those two precedents touch on custom duty matters. So we shall be relying on Section 223 of the ICMA. So in terms of my presentation, I have slides with me, and part of what the slides will cover will be to shed more light on what my predecessor, Dr. Bosire, has talked about, and just to put in context how the courts in East Africa have applied the burden of proof principle on tax disputes. So as we've defined, the burden of proof is a term that is used to assign evidentiary responsibility between parties in a litigation. So as Dr. Bosire has said, tax statutes and tax courts have applied the burden of proof in a very unique manner, which is different and provides a very sharp contrast from your usual civil and criminal matters. So for example, he alluded to the Evidence Act, and in particular Section 107 and 108 of the Evidence Act, which provide the standard of proof on the person who alleges. So then we see a very sharp contrast for tax matters, and I've listed the various sections within the various East African countries that then require that the burden of proof on tax matters is actually on the taxpayer. So in Kenya, for instance, Section 30 of the Tax Appeals Tribunals Act, read together with Section 56, provides of the Tax Procedures Act, provides that it is the taxpayer in most cases who is the appellant in tax disputes to provide proof that the tax assessment or the tax decision is incorrect, is excessive, or is erroneous. So the Tanzanian statute under Section 18 of the Tax Revenue Appeals Act has a similar provision and is worded so similar and closely to the Kenyan law. It says that in every proceedings before the board and before the tribunal, the onus of proving the tax assessment or decision in respect of which an appeal is preferred is excessive or erroneous shall be on the appellant. And the appellant in that regard, many a times, is the taxpayer, especially where you are on your first port of call for tax disputes, which in Tanzania is the Tax Revenue Board and then the Tax Revenue Tribunal. And in Kenya, it is the Tax Appeals Tribunal, then you go to the High Court. So Uganda and Rwanda and Burundi provide for very similar provisions. So we see a very consistent pattern that in tax matters in East Africa, then the burden of proof on tax matters lies with the appellant to show that the tax decision or the assessment is incorrect, erroneous, or excessive. And in the East Africa Community Act, ICMA, Section 223 also places this responsibility on the person being prosecuted or the person whose goods have been seized. So we see that the commissioner's averments or assessments are treated as prima facie evidence on the first instance, and it's the taxpayer to prove contrary. So then we see we come to note that the burden of proof in tax disputes, as we've said, is very unique from your ordinary litigation. And it sort of presumes that the taxpayer is guilty unless proved otherwise. And this places a very heavy burden on the taxpayer who is required to discharge this burden. So what I've presented here is a case finding from a study that was done by IBFD together with PwC on 1,500 tax decisions that came from the tribunal between 2015 and 2023. And the purpose of this study was just to analyze trends of how the Tax Appeals Tribunal, or what I'll be calling the TAT in Kenya, decided cases. So we see that among the top three thematic areas, documentation issues and burden of proof and evidence were among the highest ranked issues for which decisions and cases were decided upon at the tribunal. So we also go ahead to see that this issue of burden of proof is quite weighty because out of the 1,500 cases that were analyzed, 32% of them were dismissed on matters of burden of proof. And why is that so? So the tribunal, and with the statutes and the tax law providing that the appellant has the responsibility to discharge the burden of proof, then we see that failure on the appellant's part to discharge that correctly, the appeal, which will be lodged by the taxpayer, who is the appellant, ended up being dismissed. So that follows very closely to 37%, which really was on matters of law. So we see besides matters of law, the second next common issue for case dismissal at TAT is burden of proof. That just points to the importance and the strength and the weightiness of this issue in prosecuting tax disputes. So then we look at burden of proof in tax matters. So in Kenya, we strongly rely on, besides statutes, on the case of Mandizel Tabo, which is a very famous case that provides on why or justifications of why the burden of proof is placed on the taxpayer. And part of what the courts analyzed and relied a lot also on international precedent from Canada and the UK is that number one, there's a presumption of correctness in tax matters. So because you self-assess yourself, then the commissioner presumes that whatever you have self-assessed is correct in the first instance. And therefore, because assessments are raised by the taxing authority based on a self-assessment regime, then it's the taxpayer to disprove that the assessment was not correct. Number two is because strongly the taxpayer is the one in possession of this evidence. So because you own the source documents and you should maintain and keep these documents, then the burden shifts to you to prove and provide what the courts called relevant and sufficient or competent evidence to show that the revenue and the taxing authority was erroneous in their assessment. So then that hinges largely on the presumption of correctness for tax assessment, and then places the burden of proof on the taxpayer to prove otherwise. So then to look at the East African spectrum, especially in Uganda and Tanzania, and the cases that I'm going to speak about. Previously, they premised their foundation of burden of proof on this very famous case of Williamson Diamonds Limited versus the Commissioner General. So this is a Tanzanian case where Williamson Diamonds Limited was a company trading in natural resources, and in this case, diamond, and they were reporting their financials in Great British Pounds, so in GBP, and at the point of translation into Tanzanian shillings for reporting purposes, the company incurred trading losses because of the devaluation of the Tanzanian shilling or loss of value. So then the purpose of this case was that the company needed to show that the trading losses that they had arrived at was based on that exchange translation. And in setting a very key precedent, the tribunal in that instance made a case that the burden of proving that an assessment issued by the respondent is excessive or erroneous lies on the taxpayer, and in no way is it shifted to the respondent. So then we see that this principle has evolved over time, because relying on this case of Williamson Diamonds, it alluded to the fact that the appellant had the sole responsibility to discharge their burden of proof, and in no way did it shift to the respondent. We shall later see that this is more of a traditional understanding, and the position has since shifted, where the courts have determined that the burden of proof can shift in certain instances to the respondent, who is the taxing authority. So then to these two cases that we found, number one is the URA versus Diamond Trust Bank, Uganda Limited, and Republic versus Ali. So the Diamond Trust Bank is a Ugandan case from the Tax Appeals Tribunal, while the Republic versus Ali is a Tanzanian case that had undergone various appellate processes to the Court of Appeal. And what these cases did is that they demonstrated that the burden of proof shifts to the taxpayer on customs matters once a custom non-compliance or assessment has been alleged by the Revenue Authority, and that there is a presumption of correctness or illegality that stands unless rebutted by the taxpayer using credible evidence. So in the case of Diamond Trust Bank, in this case, certain customs duty had remained unpaid, and the Uganda Revenue Authority assessed the taxpayer for non-compliance, and that the importer needed to prove using original documentation for customs purposes. So this was also in line with Section 223 of ICMA, that provided that where goods had been seized or an assessment had been made or any claim had been made, then the person against which those actions had been taken had the duty to prove. So we see that unlike other civil matters, customs authorities are not required to prove any wrongdoing unless the taxpayer rebuts the presumption. So already you are presumed guilty unless you rebut it on that regard. So then this other case of Hassan Ali is that there are certain vehicles that had been seized by the customs authority for lack of duty documentation, and the accused person failed to provide proof that duty had been paid. So the decision again was held in favor of the revenue authority because the taxpayer here failed to provide proof for duty payment. So we see also that again the bar and the standard of proof was set higher, unlike the traditional case of Williamson Diamonds, where the burden only stays with the taxpayer. So where the taxpayer is not able to provide sufficient data, then the assessment is deemed correct, or in this case, the goods were seized and because of the taxpayer not being able to provide proof of duty. So then what we see from these cases is that previously the burden of proof was what we called sort of ambiguously shared. But then after these rulings, we see that the taxpayer carries a more weighty burden of proof in providing that the assessment is incorrect or excessive. And then while previously also there was an issue of balance of probabilities where you're able to prove your case to a certain reasonableness or reasonable doubt, after these rulings, what the courts have applied is that there's a more strict documentary requirement, and we've seen very many cases being dismissed, especially here in Kenya, on the back of lack of adequate and sufficient supporting documentation. So also previously is that the tax authority needed to justify why they have assessed you, but then we see that going forward, there's no requirement for the tax authority to justify the assessment. Once you are assessed, it is the onus lies with the taxpayer to prove and to provide that the assessment is incorrect, and the proof is the standard of proof is quite high. So what this then means on taxpayers is we are meant to now take more proactive approach to the burden of proof standard by maintaining and presenting documents that will support the assessment or the appeal or the tax findings to the extent that the assessment is incorrect or erroneous. So then it moves from you're assessed, then you have to search for documents, but as you enter into transactions, you need to be aware of the kind of documentation that you're meant to maintain and provide as and when requested by the revenue authority because of the stringent standard on burden of proof. So then we see that the same has been applied even in Kenya, where in this particular case, Republic versus Kenya Revenue Authority Exported Proto Energy, the issue of presumption of correctness was sustained to the extent that the assessment is considered correct in the absence of sufficient proof from the taxpayer. So then we mentioned that once in a while, or very often now, the pendulum seems to swing and shift, and cases have even said that it can swing more than 3 times from the taxpayer to the authority, and even back to the taxpayer in certain instances. So we see that the pendulum shifts where the taxpayer has provided the documentation or the support that supports the appeal. Then once that is adequately adduced, the pendulum would shift to the revenue authority to review the document and then make their case as to why they still made the assessment and to why the assessment should be upheld. So we've established, or we have gone through various instances where this burden shifts, and we have analyzed case law, and this case law apply across East Africa. So one of the main reasons why the pendulum would shift from the appellant to the respondent, who is the taxing authority, is where courts have established that the taxpayer has provided a prima facie case. So a prima facie case is basically a case on the face of it. So you have provided document, you've adduced support that on the face of it show that your transaction or your tax transaction is supported to that extent. So then the revenue authority, the pendulum would swing to the revenue authority side to now use that document or use that evidence to substantiate and support why the appeal is still valid or not. So we see that in this very famous case of Hickman Motors versus Canada, for the burden of proof for tax matters is not an issue of beyond reasonable doubt. Neither is it an issue of balance of probabilities, but more of a prima facie case. And many courts, many decisions decided at the High Court of Kenya and the Tax Appeals Tribunal in Kenya have relied on this issue. And we've seen the same applying in favor of taxpayer and in some ways against the taxpayer where the appeal is dismissed. So the other one is where, again, as we've said, the taxpayer has discharged its burden of proof. So in this very interesting case of HK Motors versus the Commissioner of Customs, this is a High Court appellate case where the High Court pronounced itself that the motor vehicles or the vehicles that had been bought by HK Motors, although they were bought at a discount, and the invoice provided by the taxpayer did not show the discount on the face of it, there was further correspondence that was provided by the important to provide that the goods were imported on discount. And the courts determined that although the primary documents, in this case, the invoice and the importation documents, did not speak to the discount, the secondary documents, such as correspondence from the supplier to show there was actually a discount on the price provided on the purchase price, was sufficient proof to show that the taxpayer actually bought these vehicles on a discount. And in that regard, the appeal, which was determined against the taxpayer at the tribunal, was now dismissed at the High Court on the ground that the secondary supporting documents the taxpayer provided gave sufficient evidence. So the other one is where the taxing authority challenges the validity of these documents. So we see that if the taxpayer provides certain documents, say the primary documents like invoices, and so at the point of provision of those documents, then the burden of proof sort of shifts to the revenue authority. And if the revenue authority reviews the documents and says that these documents are in questions for whatever reasons, either they are not original or they're illegal or you need to support them further, then the pendulum would again shift back to the taxpayer to provide that these documents are valid. So we have seen cases which are presented here where the courts have actually said that if you provide documents and the validity of those documents are challenged, then the burden shifts back to the taxpayer to provide additional supporting documents. So we see this quite often in litigating tax disputes, especially at the tribunal, where you provide documents and the commissioner keeps saying those documents are not adequate, they are not sufficient. What else do you need to provide? And part of what jurisprudence has also come out is I can only provide that which I have. So I can't provide additional records that I do not have. That said, we see that where validity of these documents are challenged, then there's an additional step to the burden of proof for you to provide additional support or to further support the documents already provided. So then this is quite unique, especially where the taxing authority alleges fraud. So we have seen many cases where the tax authority either assesses you for a longer period and part of why they would for a longer period outside the statutory
Excuse
limit.
me, Ms. Wangwe. If you
Yes,
can
John.
conclude in a minute.
Okay, just concluding. I'm on my last slide.
Thank you.
So then we see that where the taxing authority alleges fraud, then unlike the practice and the understanding of burden of proof, then here the burden of proof squarely shifts back to the taxing authority to demonstrate or to prove on why they make an allegation of fraud. So that is very unique because unlike other tax matters where upfront it's the taxpayer to support their case, in this case courts have determined that you cannot just mere allegations of fraud are not adequate, they need to be proved. So with that, then we see that and there are further cases which we are happy to share from Uganda and Tanzania that speaks to the fact that the burden of proof pendulum also shifts to the respondent or to the taxing authority. And this is a very common one on issues of appeal, because on issues of appeal, then appeals are based on issues of law and not issues of fact. So if the respondent of the taxing authority is not able to demonstrate the issues of law, more often than not, on appellate matters, the appeal work against their favor, against the revenue authority on that ground. So then, in conclusion, what we have established from these very many cases we've discussed is just the importance of maintaining adequate document and the importance of adducing the relevant, competent, and sufficient documentation, both in tax matters and custom duty matters, through the audit process and also through the tax dispute process, to support and to bolster the burden of proof position, which is very high on the taxpayer. So thank you so much, Mr. John. I'm done with the presentation.
Thank you very much, Ms. Wangwe. I think that has been very, very, very insightful. You took us right from the general role of the burden of proof being on a taxpayer and the circumstances in which it swings. I've been seeing some comments in some messages in the comment section speaking to it being very unfair to stick the burden of proof on the taxpayer, but I think it's now been resolved that there are times when it swings to the tax collector. So thank you very much, Ms. Wangwe. Since we are running short of time, I'm looking to our audience. Please, I'm looking at all your comments. I just want us to get into the Q&A and then I can read them out. So allow me get into the next panelist, and that is Mr. Richard Rukundo. He's an officer, international tax and transfer pricing at the Uganda Revenue Authority. He's going to discuss on the digital tools for dispute resolution and embracing technology. So Mr. Rukundo, please, there are very many digital platforms which the Uganda Revenue Authority has implemented. Some have been controversial. IFRIS, you can talk about IFRIS, you can talk about the iTax. So please, you come and take up the floor and share your insights. But also, as you share your insights, as I said earlier, there's there are negotiations which are going on at the UN on a protocol on taxation of cross-border services. And I think this is something which you could also speak about in light of the transfer pricing issues and all that. So, Mr. Rukundo, if you can please take up the floor.
All right, thank you so much, our moderator, Mr. John Kafko. I'm trying to get my video on, but also for my network, I think the video may be on intermittently, if that's okay with you, just to make sure I keep the connection.
That's okay. That's okay. You can put it on so that we see you for a minute and then you switch it off.
Absolutely. Are you able to get me and see me as well?
I'm not yet seeing you yet, but I can hear you.
Just a second. Yeah, hopefully
Oh,
this is much
yeah, you can
great.
see you now.
Absolutely. Good to see you. Good to see you, John. And thank you so much for the moderation so far. Like I said, to keep the connection, my video may be on and off intermittently, if that's okay, as long as you're able
That's
to
good. That's
hear
fine.
my
That's fine.
message as we discuss further. Um, so, John, good afternoon to you and the panelists. I must really thank my predecessors, Mr. Bozile and the able Wangoi Karuga. Thank you so much. I've enjoyed your discussion on the burden of proof, and I think my takeaway is the fact that the burden of proof, you used a very interesting word, Ms. Wangoi Karuga, that it's a pendulum that swings, can swing either way. And I may not have picked where we want to see it in the coming years of tax practice, but it looks like the swinging pendulum may be here for quite some time. Let me take this opportunity to thank everyone that has found time in their busy schedules to come and to attend this engagement. I also want to thank the ELS Secretariat and everyone who has been behind the scenes to make this engagement happen. And I think it is going very well. As introduced, my name is Richard Ahawe. I'm a member of the Ugandan Bar and also the East African Law Society for quite some time now. But I also apply my trade as a tax administrator with the Uganda Revenue Authority. And I've been with them for about 10 years now. Currently, I deal with compliance in international taxation matters and transfer pricing, which is housed in the Light Taxpayers Office of the same organization. You mentioned something today. I would just chip it in on a lighter note that as I was preparing for this presentation, today's dailies. The headline is about URA and some of the proposals that have been made in entrenching IFRIS in our economy, and it looks like it is gaining traction as far as that discussion is concerned. And I bring that up before I start the discussion because it's one of the platforms that I think the URA and many other tax authorities in the region, are relying on to streamline their tax administration. Well, I was assigned the responsibility to look at the role of digital platforms in streamlining tax compliance and tax dispute resolutions. And specifically, as we go further in this discussion, we'll see how technology can and indeed has enhanced efficiency, either reduced or increased disputes. But in the end, whether it can and it must foster administration to have a trust relationship with the people they serve, who are the taxpayers. And I believe that this discussion is very timely between, especially with the Association of East African Lawyers, the East African Law Society. Now, as we delve into technological advancements vis-a-vis tax administration, and I want to say taxpayers' rights, because I think the topical discussion in the end rotates up around taxpayers' rights. It's important to note that all technological advancements are geared to voluntary compliance, enhancing the voluntary compliance model. And my predecessors have mentioned something about self-assessment. They may not have gone into the details of it, but I know that all the East African countries run this model. In fact, the cases that were discussed by my predecessors, Ms. Wangoi and Dr. Bozire, specifically, I think she mentioned a case on Mandizo, Tabo SC Kenya, which I think one of the reasons when it was explaining why the burden of proof is on the taxpayer is that, the system was designed in such a way that everything is on voluntary compliance and self-assessment. And so even when the tax authorities and the examples that I'll be talking about in this discussion may be localized to Uganda, but they are shared quite across as well. So everything on every technological advancement is geared towards enhancing voluntary compliance model and self-assessment. But then most importantly, I think as a body of lawyers, is that it must follow the law. Really, every design of technology, software, whatever it is, it must follow the law. It has the impact, it has the need of fostering voluntary compliance, but it must, read to what the letter of the law, Because if it does not, then we would have very many issues of flouting tax procedure and endless litigation. And these days, I think we have, I don't like using the word woke, but we have tax practitioners who are always looking out to make sure that tax authorities then do not flout this kind of the procedures that are enshrined in delivering to the population. Now, in this discussion, like I said, the platforms and some of the examples that I give may be localized to Uganda, but they are replicated across East Africa. And largely because, as you're aware, the budgeting cycle of East African countries is synchronized, and all of us try to achieve, what is efficient in one country should be replicated in the other. That's why all these countries, you've had them mentioned, all of them have something called integrated tax administration system. They may call them different names, but in the end, it is an ITAS system, Integration Tax Administration System. In Uganda, we call it e-tax. In Rwanda, they call it e-tax as well. In Kenya, you call it iTax. But the goal is the same, to have an integrated data management system that eases the tax obligations of the taxpayer, but also empower the tax administration to be more efficient as they go about their businesses. And with what we've seen, because these platforms have not been around for so long, really. This part of the world, I think e-tax is not more than 15 years old in Uganda, and the same could be said of iTax in Kenya. It could be a give or take. Please forgive my memory on it, but it's not something that is as old by, let's say, 20 years or more. So the advancement in technology to ease the compliance of taxpayers is robust. It's always moving year in, year out. But the starting point for most of this tax administration was putting that ITAS system, the integrated tax administration system. You can call it e-tax, iTax, whichever country you're in, but it is the same. And I can confirm that almost all of these countries have it. What have we, bringing this back to the discussion, what have these platforms helped in advancing the taxpayers' rights? Because honestly, it's the word I would want to continue using. Number one, foster voluntary compliance, because we know that, I don't want to call it tax payment, but tax compliance is a civic duty. It is enshrined in the constitutions across our land, whether in Kenya, whether in Uganda. Tax compliance and not tax payment is a civic duty. And designing IT systems and platforms that enable the citizens to be able to comply with their civic duty is one of the biggest advancements that one of the biggest advantages we've gotten out of this. And how do they ensure that? Because if you look at the tax procedure laws across the land, there are, with the civic duty, there are obligations that come with it. You filing, paying, although I don't have to go into the details because of time, but I'll quickly scan through them. With the platforms like iTax or eTax, number one is that the taxpayers get a portal as opposed to a website. So meaning they have an interactive communication with the tax authority. In that, they can register for their taxes, get a TIN. A TIN is a unique identifier of everyone who wants to, advance their responsibility with the tax authority. You may have heard that a country like Uganda is moving further from just the TIN alone and integrating the NIN, the national identification. The ITAS helps the taxpayers file their returns, pay the resultant tax. John, are we still together?
Yes, Mr. Lukunda, I can hear you. We are
Yes,
together.
I just needed to confirm that you can. Okay,
Yeah, but
so I'll proceed with some of the benefits that come with these platforms, but most importantly, to enable the taxpayers meet their obligation. And I will see how this helps further when we go into dispute resolution in just a little while. Now, why am I going through all these benefits that are coming with these systems where you're able to register, file your return, pay any resultant tax, or use your credits if they're there, store your information for retrieval at will, and also keep some of your important documents like proof of ownership of motor vehicles. The systems, help the tax administration to be efficient as well. And if the tax administration is empowered with the information it needs to make decisions, then the discussion on burden of proof will be lessened because everyone will be having what information they need if conflict actually arises. So systems actually help the tax administrations to be efficient. They have a 360 view. At least now they are still rebuilding. They have a 360 view on the taxpayers' records. They enhance digital records management. They enhance accuracy. And they help in real-time validation of returns. But most importantly, they integrate accounting standards in those returns, for instance, the income tax returns, such that if you file your return, if it has a balance sheet, if it has the P&L, then we don't have, if it is not balancing at that level, then it may not actually go in. And then most importantly, it helps in risk-based enforcement. That helps in tax administrations, not having to cast a net just to fish everybody, because with all this information that the platforms are able to give, you can analyze and then do sampling, but that is based on risk analysis. In some of the when you're looking at the topic I was given, when you build all these systems, then can the systems help? It was one of those issues I'm supposed to talk about. Can all these systems then help build trust between the taxpayers and the tax administration? And the answer is yes, because with all these platforms, the revenue administrations enhance client services. What am I talking about here? If you have a complaint, and here this complaint, I'm not talking about one that is going to court, complaints, requests, letters to be handled, or any sort of service that you need with your revenue administration. There are so many of these platforms. For instance, in Uganda, there's something called a touch point. There's a touch point, you can log in, you have a query, you log it in, it comes from your portal, it is interactive, it comes as a task, it is assigned to a tax officer who is able then, or it finally lands to the most appropriate office to respond to it. So that enhances client service. You want something that kind of query is resolved in town. And then to one of the points you were mentioning, John, is pre-filled returns. We don't want to bury our heads in the sand and imagine that all these advancements, everyone knows what to do with them. You really want to keep innovating to make the work as easy, as seamless as possible. Remember what I mentioned earlier was that you want to always enable self-assessment, but then voluntary compliance. And one of the benefits that comes with this technological advancement is pre-filled returns through the systems of IFRS, DTS, and I hope for anyone who is joining, I hope people are, it's a buzzword, everyone keeps saying IFRS, IFRS. IFRS is the electronic fiscal receipting and invoicing solution. And DTS is the digital tax solutions. Why these systems help is that then all your sales, as long as you're inputting them in the system, you have all your sales and what you've spent on at the end of the month. Then you have less input on the system because it has been collecting all this information for you through the month. It can validate that return and it comes in. That's different from how it used to be way back then, where you'd have to sit through the night and enter all those invoices almost one by one. DTS is the same thing, now with you're getting a preferred LED return. And these systems that I'm talking about, like I said, the examples may sound local to Uganda, but they're replicated in almost all the East African countries. For certain, I can speak of Kenya and Tanzania, that they have these systems. Then one thing that is also dear to me as someone who is in international taxation, you must have heard that Uganda introduced digital services tax, and this applies to both VAT and income tax. Now, one of the issues we were finding is then how do you get these non-residents to file returns in Uganda? They are not here. And using these platforms that we've been talking about, someone we can call a non-resident taxpayer is able to file one return, but serves both purposes. So you have one, instead of having to file two returns, you file one return, and it isolates. It isolates VAT and it isolates income tax. That both obligations are being satisfied by one return. I mean, all this increases transparency, trust, and I can't overstate all those advantages. I'll leave it there. And John, I will quickly go through why all this is important in dispute resolution. I will summarize it in the next one.
As you conclude, Mr. Rukundo.
Yes, absolutely. Now, in dispute resolution, why have I labored to mention all this? You need information. It's one thing my predecessors kept talking about, and it's one of those where even the burden of proof keeps changing. Okay, we've given you this, then maybe this one says the tax authority may say, okay, let's see if it is valid or not. But what the platforms are helping is that there's integrated record management, and which is available, accessible by the taxpayer on their side, and on the side of the tax administration. And I know that the revenue authorities across, I can also mention for Uganda, that they keep innovating to make sure that all the other processes, whether it is objection, which is online, ADR, which is still manual, TAT, which is slightly manual, but lately I think the mediations are all online, being done in a platform like this one. We keep innovating to make sure that you help the taxpayers enhance their rights and foster trust with the tax administration. There's so much you could say about that, but in a nutshell, let me leave it there, John. Thank you so much.
Thank you very much, Richard. That was very, very insightful. Speaking to the role of technology, and I like it that you kept on emphasizing taxpayers' rights, very, 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 very important. Taxpayers' rights, and then ensuring voluntary compliance, making it easy to file returns. I think it is very, very, very crucial, and I think it goes back to the basic canons of taxation. So thank you very much, Rukundo. Since we don't have a lot of time, let me just move on to Miss Lena Onyango. I can see the chat is very, very busy. There are quite a number of messages coming in, and I've also been seeing Miss Wangoi trying to respond to some of them. So, Richard and Doctor, if you can also follow the same path so that we don't waste a lot of time in responding to some of these messages. So, to our attendees, please keep the questions coming in. If you have any comments, please share. If you have any country-specific experiences, please share them as well. So we shall be glad to receive them and share as well. Now, allow me to invite our next panelist, Miss Lena Onyango. She's a senior associate at Kaplan and Stratton. She's going to speak about building trust and fostering taxpayer authority dialogue. So, Miss Lena, if you can hear me, please take up the floor.
Yes, I can hear you. Thanks, John. And thank you to my fellow panelists. I guess you saved the best for last. And I'm happy to be here to have the rest of the attendees. Just really appreciating the interactive session that is going on, even in the chat section. So I was tasked with the responsibility of just touching on yeah, touching on building trust, and that is from a dispute resolution perspective. I hope you all can see my screen.
Yes, we can see it, but we
Yes,
haven't
I'm
seen the
having
presentation yet.
share. Just 1 second, sorry. John, you can see my screen now?
Yes, but I'm not seeing the presentation yet. If you can present.
Okay, you can see my presentation?
Yes, I can see it. Please go ahead.
Okay, right. Okay, so it's already mentioned, so I was covering building trust, and this is from the perspective of tax dispute presentation. And this is trust trust between a taxpayer and the revenue authorities. Now, so the question I asked myself is then how do we prevent disputes in light of compliance assurance processes that now revenue authorities are coming up with? And having experienced in tax dispute resolution, taxpayers find ourselves in situations where you're pretty much trying to plead your case. And I believe the previous panelists have touched on this. So you find yourself claiming you're not due to pay taxes, you are owed a refund, the carry assessment is wrong, you're not liable in regards to an assessment raised by KRA. But the question is, how do we now ensure that as taxpayers and our clients, because I believe we are lawyers on the forum, how do we ensure that our clients do not get to a place where they've been put in a defensive position where they need to, antagonize or argue cases with the KRA or the Revenue Authority? Now, I sort of came up with 8 key things that taxpayers may consider putting in place just to ensure that they are, they minimize the exposure to tax disputes and, issues with the revenue authorities. And first and foremost, it's the question of just ensuring that they are compliant with tax obligations. This is both legal compliance in terms of paying the right amount of taxes, keeping the documentation that is necessary for purposes of supporting the returns. As already mentioned, we are self-assessment kind of system, and also just ensuring that they comply with any new developments in the law. Now, what I've also noticed from experience is also taxpayers shy away from communicating with tax officials, probably wishing the correspondence would go away or things would be swept under the carpet. But in my view, timely communication between a taxpayer and the revenue authorities plays a major role in ensuring that an issue that would not otherwise have been a dispute does not now manifest to become a fight between them and KRA. And this is not just in regards to the daily communication, but also when KRA approach a taxpayer for tax audits. It's important to ensure this communication, preferably in writing, between themselves, and to ensure that the documentation and everything else that has been provided for is furnished to the KRA. And as Wangui has touched on this, the burden is deemed to be on the taxpayer to the effect that the tax is not due, and then the pendulum now would shift to the commissioner. And therefore, if the communication is clear and the documentation that has been requested for has been provided, then the pendulum sort of shifts to KRA to now demonstrate how that information is insufficient for them to rebut or to withdraw the assessment. Another key factor is I believe taxpayers should now make use of private rulings, public rulings. From a Kenyan perspective, these ones are issued by KRA, but also we have a recent development in terms of advanced pricing agreements. So I will just take a deep dive in this in the subsequent slides. One thing that is also very important is to ensure that you get a proper representation, or not just proper, but qualified representation, get lawyers, get accountants who know their way around tax disputes and would be able to manage the tax audit process and any communication on your behalf with the tax officials. Over and above that, the taxpayer should ensure that they keep abreast with any changes in the law. Every year, we literally have changes in law in East African countries. As already mentioned, we're already seeing changes in terms of the tax framework in Uganda. And I believe when Uganda catches a cold, Kenya sneezes. So I'm curious to see what would be now the next thing from a Kenyan tax perspective. Does it mean that we'll now also move in towards taxing those new sectors that now Uganda is leveraging on? Over and above that, there are certain tax issues that affect certain sectors, and it's important for taxpayers, either through associations or their groups, to now participate in lobby process. And this would mean that they take not a firefighting approach, but they're preempting tax disputes. And this can be prevented through policy formulation, which is through lobbying, especially when the finance acts are coming into play. And more importantly, there's ADR process, which is the alternative dispute resolution framework within the tax authorities. So from these 8 points, you can clearly see that 4 or so relate with engagements directly with the revenue authorities for purposes of ensuring that, 1, you build trust, so you foster that relationship, but 2, you're preempting a situation where a tax dispute may come about, and therefore just putting stop-back measures to ensure that that does not happen. And as I take a deep dive, we'll start with private rulings. So I'll just give a Kenyan perspective. Now, private rulings are encompassed in Section 65 of the Tax Procedures Act, and therefore, and basically a private ruling is a situation where a taxpayer makes an application to the commissioner seeking the commissioner's interpretation of a certain provision of a tax law in relation to a transaction that they seek to enter into or propose to enter into. And while the taxpayer is making this application, the law requires that they clearly set out the details of the transaction that they propose to enter into. They provide the documentation in support of the transaction. They give their understanding of what the legal interpretation of the tax law, and they seek a precise more specifically, they need to give a precise question to the commissioner as to the interpretation that is required. For instance, where the law seems to have an ambiguity, or where the law is not clear as to who the person with liability to pay taxes, then all those details need to be set out in an application for a private ruling. However, it's important to note that you cannot file an application for a private ruling where that particular transaction is either the subject of an audit, is under an objection process, or a notice of assessment has been served on the taxpayer on the same issue. And just to give support, the strength as just to emphasize on the impact of a private ruling, there's this decision of Kenya Nat Limited versus the commissioner, where the tribunal was very clear as to the binding nature of a private ruling that KRA has issued. However, the tribunal was stated that if there's an instance where there was material non-disclosure on the part of the taxpayer, or there was misinformation on the part of the taxpayer, then KRA would ideally withdraw the private ruling. However, in that case, there was no such evidence had been adduced by KRA, and no such allegation had been made by KRA. So therefore, the private ruling was ideally found to be binding, and KRA could not get themselves out of it. And I believe, Wangoi, this is also a situation where now the pendulum sort of shifted to KRA to demonstrate that, there was non-disclosure. There was non-disclosure of material facts or information on the part of the taxpayer. So the pendulum in this case of burden of proof sort of shifted to KRA. They were not able to substantiate or prove that the taxpayer was not forthcoming with information, and therefore the private ruling was found to be binding upon them, and the taxpayer appeal was successful. Now, as I mentioned, advanced pricing agreements, APAs, are a new phenomenon, especially in Kenya, but that is something that is there in Tanzania, Uganda, and Rwanda. And basically, an APA is an agreement between a taxpayer and a revenue authority on how a transaction should be priced. And this is more specifically to transfer pricing disputes or transfer pricing issues. Now, what happens is a taxpayer would be able to approach the revenue authority, notify the revenue authority of a transaction that it has with a non-resident entity, related entity, and therefore transfer pricing legislation is triggered. And it would share the transfer pricing methodology for that transaction. And once that has been agreed upon, then it's set down in an advanced pricing agreement, which would now be binding upon the revenue authority. But the important thing about that is it would now prevent a situation where that same taxpayer is subjected to a transfer pricing audit and a transfer pricing assessment emanating from the same transaction. And just to set out the characteristics, as I've already stated, it has involvement of foreign countries, so it's a non-resident related entity. The issues discussed are based on factual cases, which are typically complex transactions. So it's not a normal day-to-day transaction, but it's a complex transaction. And the APAs require intensive and significant negotiations between the tax administration and the taxpayer. And which is very important is the fact that the APA agreement is confidential and it is not necessarily published or made public, which would mean that if I had a company, a multinational entity, and I entered into an APA agreement with KRA, then that information would not be accessible to just any other taxpayer. And other taxpayers would now not be able to rely on that information or that agreement to substantiate their tax position. So basically, the whole thinking about bilateral APAs is to just ensure that we supplement the traditional mechanisms that give taxpayer and tax administrations advanced tax certainty and, in essence, prevent tax disputes before they happen. So another aspect of tax dispute prevention that I'm very excited to share about, and I'm very big proponent to this, is alternative dispute resolution, which is through the KRA or the revenue authorities. Now, ADR, from a Kenyan perspective, is provided for under Section 55 of the Tax Procedures Act, which provides that taxpayer may engage in alternative dispute resolution with the revenue authorities at any stage, either before, when the matter is before the tax appeals tribunal, or that when it's before the courts. And the law provides that this proceedings need to be concluded within 120 days. From experience, we noticed that the tribunal is a bit strict on the timelines, but when now the matters go to court, courts are a bit lenient as they encourage parties to engage, and therefore sometimes the timelines go beyond the 120 days. Now, there's a limit to the matters that a party can institute or try to resolve through ADR, and one of them is where the matter involves a question of the constitutionality or not of a tax provision, and this is to confirm, the jurisdiction of the High Court. It's only the High Court that's vested with the jurisdiction of determining or interpreting the provisions of the Constitution and whether rights that are in the Constitution have been infringed upon. And therefore, matters around constitutional issues cannot be taken to ADR. Matters that require technical interpretations of the law are not taken to ADR. Again, the ADR framework does not have the mandate to interpret provisions of the law that is vested in the tribunal and the courts. And also in matters where a judgment has been rendered, probably either of the parties has lost and has not been disputed, meaning the judgment of either the tribunal or the court has not been contested, and therefore the orders there be stand. And most importantly, which is a challenge that we sort of face in certain cases where there is unwillingness either on the part of the taxpayer or on the part of KRA to participate in the ADR process. Like I said, it's a voluntary process. It's on a without prejudice basis, and therefore, if either of the parties does not trust the process or is not willing to participate in it, then ADR process does not take place or that cannot proceed. That said, there are certain benefits to ADR. One, there's faster resolution of disputes. On an average, an appeal before the Kenyan Tax Appeals Tribunal can take about a year, sometimes a year and a half, maybe less. But the High Court takes longer. So ADR gives the taxpayer an opportunity to resolve a tax dispute within a lesser period of time. Like I mentioned, the law provides for 120 days. If you are able to resolve a dispute within 10 days or at the first meeting, well, super, that's great. But the speed at which matters are determined through ADR is also dependent upon one, like I said, willingness, but also the friendliness of the revenue authority. And sort of from experience as well, interaction of taxpayers and the revenue officers who probably carried out the audit process in a forum that is sort of mediated or governed by now the ADR team of the KRA, sort of fosters friendly relationships and opens a forum or an avenue for conversations to be had between the two parties in a less aggravating, less aggressive kind of situation. The other thing that is a benefit of ADR is it's very accessible. ADR sessions are held both virtually and physically, so you can participate in the ADR process regardless of where you are. It's very cost effective. There are no additional charges on the part of the KRA, but also as lawyers, we usually consider giving a legal fee discount when we're able to resolve a matter through ADR, because now the nature of support that you're giving a client is less time and less technical, if I may put it that way. Very important to note that it's very confidential. Again, it's not information. Sorry, John, there's a bit of an echo. I'm wondering.
Yeah, Miss
Oh,
Lena.
yeah, yes, time. I know.
Yeah.
Yes, one more slide. I'm almost done. So it's a confidential process. So again, this information is not shared with the public. Again, it's on a without prejudice basis. And because one, it's a very friendly conversation where people are able to open up and share experience and share ideas, then it enhances compliance. And that way it reduces disputes, the chance of a matter becoming a dispute. Now, from an international perspective, and this is a bit technical, so I won't go much into detail on it, but Kenya and other African countries enter into double tax agreements with other jurisdictions. Now, from a Kenyan perspective, we use the OECD model of our tax treaty. And Article 25 of these treaties provides for what is called a mutual agreement process, which basically governs situations where there's a dispute as to either the dual residency of a taxpayer, transfer pricing arrangements, profit attribution cases between two countries. And it's a process that once a taxpayer submits information to the relevant authorities, it's a process that sort of is governed by a revenue authority and another. It's not the taxpayer and a revenue authority of a foreign country, but it's a conversation that the two revenue authorities have, which would involve interpretation of what the impact or the provision of the treaty is and where the tax is due and payable. And through that, now the taxpayer is told, okay, fine, this is the mutual agreement that the countries have come up with, so you can accept or you can reject. And from there now, the taxpayer can decide on what the way forward is. But the reason why I put in is because one, it minimizes conflict, but it also provides just general information on interpretation of certain provisions of the double tax treaties. However, the fact that there seems to be a lack of precedence or glossary on MAP agreements that already are in force. My recommendation is, going forward, probably countries consider, publishing the outcomes of MAP cases, which now build precedents on this area. And there would also be, this would now trigger possible reforms in terms of allocating profits of multinational companies. And so what next? I think just to prevent or, control tax disputes is one, capacity building, which we are doing here. And I'm glad to have, we've had quite a good turnout, creating awareness, not just with professionals, but also professionals and taxpayers and all the key stakeholders. I think there's a need to encourage institutional and political support in terms of legal framework and things like MAP process and ADR, making tax dispute resolution more accessible to taxpayers. And I think there is also a need for dialogue between local tax authorities, regional tax authorities, and at the international scale. And I think with that, John, I can close. I will just stop sharing. And thank you, everyone, for your attention.
Thank you very much, Ms. Lena, for delving especially into the alternative dispute resolution and emphasizing the role of a taxpayer. And most importantly, highlighting that there is still need for more awareness and sensitization on some of these issues. So thank you very much. Since we are running out of time, let me just invite our last presenter, our last panelist, Alan Murangera from Youth for Tax Justice Network. He will speak about equitable taxation and addressing regressive taxes and human rights, and highlighting issues around VAT and dispute resolution. And also, Alan, since today is International Youth Day, you could also link our conversation to the SDGs, the theme of the International Youth Day. But also, since you are in New York and part of the negotiating team on the UN Tax Convention, you could also give us some highlights from there in relation to the topic we are speaking about today, especially in regards to dispute resolution and the use of digital tools to enhance dispute resolution. So, Alan, please.
Thank you very much, John. I hope you can hear me.
Yes, we can. Can also see you.
Awesome. As introduced, I am here as Alan, Ranger, Team Leader Chief for Tax Justice Network. And we work to center young people around conversations on resource mobilization, education, and utilization for their benefit. We are based in Kampala, Uganda, but we do work in 8 other countries within East and Southern Africa. Well, it's quite a lot, but and given the fact that I'm speaking last after very, very able presenters, I think it's going to be quite easy for me because most of the things that I thought I would talk about have been said. But I'll try to use as very few minutes as possible to make my case. I would like to start with a process that is currently ongoing. Right now, countries are negotiating a UN Framework Convention on International Tax Cooperation. And basically what we are saying, or what they are trying to do, is to come up with sort of a system where countries can cooperate in terms of when it comes to how do we share taxing rights, how do we, and part of the things, they're quite emerging situations when it comes to taxation of businesses, services, especially in the digital era, but also most of those that are cross-border. Right now, you can be in Uganda and do very good business in Kenya, and then neither Kenya nor Uganda can tax you and all that. So
And given that why this is important, and I'm going to come to this specific question, is that most of the times within our tax laws, whether they are double taxation agreements or multilateral tax agreements that we come or we are party to, in most cases they override our domestic laws. So if you have some sort of dispute and maybe you're relying on a double taxation agreement for your assessment or for your objection or for any of those things. In most cases, in most of our laws, that agreement will take precedence over our domestic tax laws. So that's why the process that is ongoing around these negotiations is important, and that's why we need to see to it that some of the decisions or um, positions taken at this level, because eventually when it becomes a convention and subscription protocols, and it will eventually also become part of our tax laws or jurisprudence. So that's why the process in New York is important. And we're having corresponding negotiations between the Convention on International Tax Cooperation, but also on other two early protocols. So there is a vision to be about 5 protocols to give effect to the convention, but the early 2 protocols, one is on the taxation of goods and services, especially those that are within the digital era, but also the second protocol, the second early protocol is on prevention and resolution of tax disputes. So with it, first you do the prevention. If the prevention doesn't work, then you look at the resolution. I'll just take 2 things out of that, then I'll come to what I was supposed to discuss. One is that even when we're talking about tax disputes at a local level, we know that most of our companies now, or most of our clients that we have also started benefiting or taking advantage of aggressive tax planning. So it is no longer limited to um, multinational corporations, where you will find that that even taxpayers within our jurisdictions or within our countries have started, to have related companies and are dealing with each other, and therefore the issues of transfer pricing come in even at a domestic level. So you'll have a group of companies; they don't have to be really cross-border, but you could have just a group of companies relating with each other, and then they try to reduce their tax liability through some of those transfer pricing mechanism. So one of the big, I think, rules that countries are trying to suggest is to do away with the entire transfer pricing systems and rules, and then have some sort of unitary taxation system with a formula to allocate tax rate. So it won't matter whether you have 10 related companies, they'll just tax you as one unit. So, and usually using a formula. Like I said, of course, most of these are still at international level, but given the influence of some of these treaties and double taxation treaties that we have on our domestic laws, then it is something that we may have to look at and maybe think about as we serve our clients, but also as we're looking at influencing policy. Like Lenny said, some of the things that we may have to do is to influence policy. I was asked to talk about over reliance on indirect taxes, especially around VAT, excise duty. Now we have digital service taxes and all that, how they affect the people, and then of course how then we can use dispute resolution to make it a bit fair using the human rights framework. Of course, I would like to assume that we all know that indirect taxes form most of the bulk of our tax revenue collection within East Africa. And for simple reason, but for statistics show that over 65% of revenues that are collected in Uganda come from indirect taxes. So you're looking at VAT, excise duty, customs, digital service taxes. In Kenya, it's about between 58-62%. In Tanzania, it's over 60%. So as you can see that given the nature of indirect taxes and how easy they are to collect, then it goes that it has a wide range. Of course, maybe before I can also give the reasons as to why there's a lot of reliance. Of course, the first reason is that they're easy to collect, meaning that if you are an importer, they're collected at importation. If you're a manufacturer, right now we have what we call stamp excise. I think they're manufacturing stamps or duty stamps. So at the point of manufacturing, the revenue authority already knows how much, so you collect. And I think Richard talked about it when he was talking about the technologies and tools that are being used. So they're easy to collect. If you consume, buy something in a supermarket and all that, you get taxed at that level. The other reason, of course, is the nature of our economies. They're still heavily informal. And these days, we don't think it could still even be by design. There are very many people that are in the formal sector that could actually be in the formal sector but choose um, not to cross over because of the challenges, some that have been stated here, but also where they're saying that there's, since there's over what people call some bit of over taxation, then they choose to remain in the formal sector. Of course, the tax bases are narrow, so it is easier to collect money at the point of consumption and all that. Of course, the challenge with this is that it affects people that earn lower because they spend this appropriate amount of their income on, consumption. So if you're consuming, then you're paying a larger tax, or you're paying more compared to someone that has or owns more or has more income. So if you have, let me say, 1,000 Kenya shillings, someone has 10,000 Kenya shillings. If you buy the same kilogram of sugar, the person that has 1,000 will pay a significantly higher portion of his income to tax than the person that has 10,000. So that's usually the problem when it comes to reliance on indirect taxation. Now, of course, the question then was, how do we, from a human rights perspective, one, deal with issues that sort of unfairness, but also how do we then use dispute resolution when it comes to trying to close that sort of gap when it comes to where revenue authorities need resources, but also taxpayers need some bit of protection or some bit of protection around or against those high sort of taxes. So of course, one of the ways is that dispute resolution, if we have it in a system that is accessible, and I think, Richard, when you talk about, digital tools, of course, the challenge with that is that not everyone is going to have access, not everyone is going to be able to have the knowledge and know how to use some of these tools, and information is usually also scarce, like I think it was either Lena or who said that tax laws are amended every year, for example. So at what point does wananchi, mama mboga, or anyone, get to know that, this year there is a waiver, this year there is this year there is this. So a system, a tax dispute resolution system that is accessible would go into a long way for some of these people, because if you're being taxed at consumption, then sometimes you don't have a lot of recourse. But when you look at other sort of taxpayers like importers, when it comes to customs, like manufacturers, I think some of these then become a little bit important uh, and accessible, and also timely and transparent. And I think it's I'm going to keep on saying that the basis of all of these decisions is a self-assessment. Now, sometimes, like I think Doctor said, you get into a cafe, you need a tax clearance certificate, they put in whatever information they put in, you have a tin, and then probably the tin they put you an importer, you very many things that you do not know, but that is your own self-assessment. And then it then goes back now to you to try and prove that, that information was not really your information. So if we can then make this a bit simpler to maybe change some of that information for the ordinary person, because it is very easy to prove or know that I don't, especially if I went to a cafe to get a tin, that there are certain things I will not have. Of course, for some regimes, we have had presumptive taxation and all that, but if we have a system that is transparent, that I can be able to know how and when some of these things or some of this information is because it's self-assessment, and then it's the evidence, the documentation that we need to have for our ordinary people. So when I'm talking about VAT, or manufacturer may be able to have access to some lawyers here and all that, but for these other people may not be able to do that. So basically, how we can use dispute resolution is if we have a system that is accessible, resolves disputes in a timely manner. You don't have to spend 5 years of a dispute, because every year there will be other filings, there will be other things that you may need to query about or resolve. And then, of course, that is transparent. Everyone can get and verify or have that information as and when they need to have it. And I'm seeing my time. Maybe lastly, like I said, I'm talking last, so most of these things have been talked about, is about the International Youth Day. Of course, for us, like I said, we look at how states, how this process is important to delivery or achievement of SDGs. We believe that the financing bit of it is at the core of attainment of SDGs. We need resources for all these processes, and one of the most reliable way that governments can raise resources, finance the agenda, is through taxation. So then that requires, or that then brings us to make sure that then those tax processes have to be fair, have to be just, and then also have to work for the people. It's not enough that the government raises revenue, but it is important that it raises it in a way that is accountable, in a way that is fair to the taxpayers, and in a way that if there is then any conflict, first we seek to prevent. So we then encourage some of the tools that Richard talked about, but also keep on keep on training or keep on sensitizing people around the importance of self-declaration, because it's the, I think it's the gold standard. Is when someone knows that this information is coming from me, then I think the way they deal or the way they share some of that information then will determine whether you even have future sort of disputes, or you have future sort of disputes that you may have to work on. Then the documentation, like we have tools these days that can help us document. And then once the prevention fails, then I think we can have a data system that resolves some of these disputes. So, John, I apologize. I see we've hit our time, but I hope I did justice. But of course, I will answer any questions that I may have within the chat. Thank you very much.
Thank you very much, Alan. I appreciate that. I think you've been as elaborate as possible within the little time given. So thank you very much. So I'm just going to get into, because I'm seeing our time is fast spent, but I want to get into the Q&A. I've seen some of the questions have been posed in the chat, and they have been addressed by Ms. Wangoya and Ms. Lena. Thank you very much for that. I'm also seeing some 2 hands up here. I don't know if I can give them a chance. I see Maureen. Maureen, can you hear me? Maureen, if you can. Okay, I see Maureen. I can now see Miss Finn. Miss Finn, can you hear me? Please unmute. Miss Finn Tai, please unmute and speak. Okay, I think let me just get through some of the comments that have come through. As I've said, some of the questions have been addressed in the chat. In the Q&A session, I'm seeing something from Baraka. He's saying the burden of proof in Tanzania is found under Section 19(2)(b) of the Tax Revenue Appeals Act. I can see some anonymous attendees saying we have different tax experiences and burden of proof. Why the big difference on the same? And I think this is being put out in the since we are the East Africa community, probably how can we reconcile some of these differences in burden of proof. But I think it has also been highlighted by the panelists that generally it is the burden of proof is on the taxpayer, and it only swings to the tax collector in only a few cases. So I think that should be clear. Then someone is asking why we don't have enough data from Ethiopia. I don't know. Probably the panelists can explain, can elaborate on that, why there is not so much data on from Ethiopia. Then I see Meserat Kevede, why not referring to Ethiopian tax and customs laws? Yeah, I think it appears we have so many attendees from Ethiopia, and they are concerned that we haven't really spoken so much about Ethiopia. I think that is something that we can move forward. I mean, take forward. Probably next time we can address that. So I can also see a comment here. Okay, about SMEs. This has been, I think, addressed by Miss Wangoi. I think the most important thing was that we need to have good record keeping for all businesses. It's very, very important, and especially for self-assessment, and it also helps when it comes for you to uh, to disprove your burden of proof, to ensure that you discharge that burden of proof on you. So record keeping is very, very important. I don't know how this can be reconciled with small taxpayers, because for example, in Uganda, there is a regime, a presumptive tax regime, which doesn't require the small taxpayers to keep records. So how do you expect these ones also maybe to keep up with such a trend? So that is probably something that can be addressed by the panelists. Yeah, so I think there's not so much from the participants. Most of the questions have been addressed in the chat. So I'm going to get back to my panelists. I want us to get into our closing remarks. I can see Dr. Your hand is up. As you answer your question or put up your comment, and as you also make your closing remarks, I want you to answer this question. It was, I think, earlier alluded to by Mr. Rukundo. Where do you want to see the burden of proof in the coming years? The discussion has been that it has been swinging. Do we want it to keep swinging, or do we want it settled on a specific side, taxpayer or the tax collector? And I also say this because there's been a lot of pushback from especially taxpayers on unfair tax policies. We've been seeing that especially in Kenya around the finance bill. So where do you want to see this burden of proof in the coming years? That's the first question. But also the second one, in light of the negotiations in the UN, what are happening at the UN on the UN Tax Convention, I also want you to highlight something that you want to see, that you would like to see in this convention in regards to this burden of proof. And I know it could be something at a global level, but as Alan also highlighted, at the end of the day, this is the convention will have to be domesticated in the different countries, and at the end of the day, we might have to adopt some of the provisions in the convention into our domestic laws. So, what is that one thing that you think should appear in this UN Tax Convention and these protocols on dispute resolution and prevention, but also on taxation of cross-border services in the digital market? So, Dr. Bozia, please, if you can go on, and then we shall move in that order for our panelists, please.
Thanks, John. Thanks, John. First is it's not an indictment, but I need to raise it. I mean, there's been too many Kenyans. The process, we've also tried to talk about issues in other countries, and we have also missed other countries. So next time, we need a balance. We need a balance on this. So, for instance, I've seen questions from Ethiopia, a number, where we are not using their cases, where we are not using their data. And of course, one is you know, the initial East Africans, especially the Ugandans, Kenyans, and Tanzanians, been brought up under what is called the common law legal systems. So you find the discussions and decisions are replicable across the country. So one can hypothesize about what has happened or will happen in Tanzania based on what is going to happen in Uganda. So we have that, but then I also see Ethiopia. Their legal system, strictly speaking, is not does not fall in the common law. And unfortunately, speaking for myself, I've not taken time to interact with their legal system. So I may not sufficiently be able to answer some of the questions, but there's one question which has been asked by, I think it's called Manaye Mininjili. I think he says that the taxpayers in Ethiopia have the obligation to prove that the burden is incorrect. And sometimes the tax authorities use information that is beyond their reach. So he's asking what type of safeguards that would be needed to deal with this. So if I'll speak from knowledge, my knowledge from build from the areas I've been is really to seek for amendments for the amendments of the law to introduce what we call a balance of probabilities when making decisions around these particular issues. But whether this is something, of course, that can be done in their country will depend on the constitutional dispensation and framework they have. Of course, that has a bearing on how the executive exercises its powers and also how the courts normally interpret their laws. And I think that is my initial take on it. Regarding the international negotiations, what I would wish for, if you asked me, we should ditch all these double tax agreements that we have around, are introducing too many complications for. If you ask me, that is of course, the ideal situation. But since the ideal situation may not be there, then we need to have more taxing rights for developing countries in services, in resources, just to mention but two. So, John, that's what I would be able to say. But thanks to the organizers for pulling these together. Thank you.
Yeah, thank you very much, Doctor. Just one more thing. Where do you want to see the burden of proof in the future? Is there somewhere specific or?
It's not
in
going to
any-
change. It's going to be there. What you are likely to see is introducing safeguards to
okay.
deal with some very extreme cases, and the safeguards will come from, for instance, in Kenya, I've seen them coming from, the courts. So they don't want the tax authorities to be speculative. They don't want them to engage in fishing, expeditions. But when it comes to legislations, because of the pressure for more revenues to address the ever-increasing social and economic needs, probably will be too ambitious to surmise that there will be changes in the laws.
Thank you very much, Doctor. Thank you very much, Doctor. Can we move on to Miss Wangoi? As you close, please, where do you want to see the burden of proof, but also what do you want to see in the UN Tax Convention?
Okay, thank you very much. And again, apologies to the Ethiopians for not having been more inclusive. I had a very short stint of practicing tax in Ethiopia back in my days at KPMG. And as a Kenyan doing tax in Ethiopia, I must admit it is quite challenging. So with that, probably we are not sufficiently equipped to purport to be authorities in Ethiopia. So maybe going forward, the society can consider to having an Ethiopian representative on the panel. As to where I see the burden of proof trend is, I think increasingly the Revenue Authority will require a higher standard of proof from taxpayers. And we have already seen that on decisions coming out from our courts and tribunals. And there has always been a pain point of what level of sufficiency is sufficient, because the Revenue Authority has always gone down that rabbit hole, seeking and requesting for more information, some of which, unless I reproduce or I create as a taxpayer, are not within my custody. So then it's just that balance of, can the Revenue Authority also work with what taxpayers give them to the extent that that is reasonable, instead of wanting to make this request for information very, very open-ended, to the extent that the taxpayers are not able to meet that requirement. And of course, it always works against taxpayers if that requirement is not met, because their appeals are not sustained. They are dismissed and thrown out of courts. On whether the law and international front can be changed, I think it's a progressive approach, because this burden of proof concept, in as much as it's not quite new, it is only now that we are seeing it come out very prominent in tax decisions. So I'm sure revenue authorities and governments are also wanting to see how that will progress in future. But of course, as Dr. Bosire has said, not very sure whether something will change in law. And we're just hoping that the courts will exercise justice by probably putting, a sort of stop to this unending request of information, because that's what we are seeing, at least from a Kenyan perspective. I guess with those few remarks, what I'd urge taxpayers and advisors on this call is we cannot overemphasize the need for proper documentation. Everything now has to be properly documented and those documents maintained, because you could document them, but in the next 5 years, they are not there in the company. So documentation. As a lawyer would say, evidence is what will make and sustain your case. So we cannot quite overemphasize that. Thank you very much and have a good evening.
Thank you very much, Ms. Wangoi. Let me move on to Mr. Richard. Richard Rukundo, please.
Great. Thank you so much, John. And let me take the opportunity to thank my fellow panelists, my predecessors, for all their comments. I think they've been quite insightful, and there's a lot to pick from this discussion. My parting shots, I think, let me start with, well, it could be a personal apology to my brothers and sisters. So there's that comment from our Ethiopian brother. No, it's not by design, I can promise you. But it's noted. Maybe in the next engagement, even with the Secretariat, we can try to be a little more inclusive in our examples. John, on tapping from the discussion, from the burden of proof, I think when I was making my opening remarks, I said, well, I hadn't picked from the presenters where they want this to go, because the truth is there is no straight answer on that one. I think we are still here for quite some time, but coming from me as a practitioner, as long as well, this is something that I deeply feel for, that as long as the taxpayer has established a prima facie case, like Ms. Wangoi had mentioned, if someone has established a prima facie case on why they have come to TAT or any other panel that is resolving the conflict, then the burden of proof can switch. And the same goes for, if the other party establishes a fact that has to be rebutted up until we come up with a solution. That swinging pendulum may be here, I'm afraid, for quite some time. We just need to streamline it much better to make sure it doesn't make then the process longer and tie up our revenue in conflict resolution. The last one, then you mentioned something about the ongoing the ongoing discussions at the UN. I can't speak for my employer, but on a personal level, even on a technical level, we are following those discussions. I think I can't speak, like I said, I can't speak for my employer, but we follow them. For me, my parting shot on that would be it's easier if the whole tax system is made much simpler. Because if it is not, and I don't know if some may have an idea that the UN had, for instance, come up with Article 12A, the fees for technical services, after noticing that most of the sections were leaving countries like ours with nothing to tax in relation to some of these services. And that comes from a cry of, well, you're leaving us with nothing. And every time there's a vacuum, that's how things like DST actually take traction. So my parting shot on that, yes, we are all following those discussions. We hope that the UN, can put their foot down and come up with discussions that will, best put the interests of countries like ours to the fore, and we have something for it. And with that, I think I can end. I can thank you and thank everyone at the Secretariat for organizing this discussion and many more to come. Thank you so much.
Thank you very much, Richard. I like that you don't want to speak for your employer, but that is a very good suggestion. Simplify tax systems. I think that is long overdue. Very, very, very important, especially even for the young people. We no longer want to see tax systems complicated because it also reduces compliance. Thank you very much, Richard. So let me move on to Miss Lena very quickly. Ms. Lena, as you conclude, what you want to see in the UN tax convention, but also where do you see the burden of proof in the coming years?
Thanks, John. And just to close on the burden of proof, I think it sort of has two aspects to it. So there's the burden of persuasion, and there's also the burden of being able to come forward with evidence in support of whatever it is you're trying to put across. So it's you have to merge these two aspects to enable in order to have a successful appeal before a court of any forum. And so, as emphasized by the rest of the panelists, at the end of the day, it's how you have your documentation in place and what are also the precedents that have been put in place by the courts. As already mentioned, we have quite a robust precedents on this issue from the courts, decisions of the court and the tribunals. Curious to see how it pans out. But yeah, I can't say it's one of those things that need to be set aside, but it's something that can easily be developed and grown and guidelines be put in place by the courts. Now, from a UN perspective, from what I've been reading, I haven't taken a deep dive into it, but what I've been reading is developing countries such as the East African countries have been pushing to have a right to fair taxation that is equitable as well, but also just the question of automatic exchange of information, which most of the countries have subscribed to. But the challenge that is there is information is not flowing to developing countries, but information is flowing the other way to developed countries. So just having a balance in terms of cooperation on automatic exchange of information. Now, to our Ethiopian brothers, we do apologize as the recently appointed chair of the tax committee. This is something that we'll take seriously. And we're looking forward to, the annual conference in Addis that is coming in this year. And we hope that more of you will be able to participate on that front in terms of sharing Ethiopian law, which is evidently very foreign to the rest of us. And with that, thanks, John, and to the rest of the attendees.
Thank you very much, Ms. Lena. I hope that is taken note of. Thank you very much, and I hope our Ethiopian brothers and sisters will be there for the ELS annual conference, and we hope it will be as inclusive as possible. So I'm going to move on to our last panelist, Alan. If you can follow the same trend, where do you want to see the burden of proof, but also what you want to see in the UN Tax Convention?
Thank you very much, John. I think everything has been said. As long as, for the first instance, it's a self-assessment system, I think the burden of proof will always start with the taxpayer. So Like Richard said, I think we're going to be seeing the pendulum sort of system for a very long time, because from the first instance, it's you volunteering information to the authorities, and then it's from that information that assessments are made and decisions are made, and then therefore you either contest or you have conversations around. So as long as it's still self-assessment, I think the burden always starts from the taxpayer, but we can hope with what Mr. Wangoi said, that with the documentation and evidence and all that, I think then it can become easier on part of the tax payer. In terms of the conversations that are happening in New York, I think, like Dr. said, we are hoping for seeing more taxing rights coming to countries, especially those in the global south. We want to do away with the OECD sort of the tax rules that have been really a problem for developing countries for a very long time. But also, we want to see that as the tax rules are being negotiated and agreed on within the UN, where we know that one country has one vote, then most of these systems are going to be a bit fairer, we hope. But also in terms of for the tax practitioners that are on this call, I think a lot of interest has been put in and examining the effect of transfer pricing when it comes to, or mispricing when it comes to denying countries, especially those in the global south, tax revenues. But like we said, when those that are supposed to pay don't pay, then we have over reliance on indirect taxes. So there are rules that are being suggested to, in some extreme cases, we even do entirely away with transfer pricing altogether. So I think that's a conversation that we should follow and see if there are ways we can make the system better. But of course, at the end of the day, we want a global system that allows fair allocation of tax rates. That it doesn't that a country has taxing rates, especially if there's significant economic activity within that country, or whether there is significant value formulation, or even just market share. That if you have a company that has a significant market share in a certain country, then that country should also be able to have some bit of those taxing rights. So basically, we're just saying that we want more of taxing rights, especially I think from the US, because most of these multinational companies okay, there are a few countries that are not sharing these rates, or that were entrenched within some of these double taxation agreements that we have, that we were hoping that this framework convention on international tax cooperation will dwell with. And we encourage lawyers and everyone to follow this conversation. It's going to be to take place for quite some time. The timeline is about 2 years. So we are in November. The good news is that the negotiations are coming to Nairobi, so and we hope to have a text for the convention, and then we'll then go from there when it comes to the protocols. But thank you very much, and again, apologies to our Ethiopian brothers. I think Gabriel and the team, this is something that we can take up, and then we make sure that subsequent engagements have a sort of inclusive and representative um, formula or panelists that will be able to share. Thank you very much, and have a good, I think it's good afternoon. Yes, thank you very much, John.
Thank you very much, Alan, and to all our dear panelists. Thank you for such an engaging discussion. I hope to all our attendees it has been informative, and it is giving us food for thought on how we can navigate these stormy waters of the burden of proof when it comes into litigation, but also when it comes to issues on alternative dispute resolution. How do we avoid or prevent these disputes in the very, very, very first place? So thank you very much once again to the East Africa Law Society for organizing this, and to our colleagues from the Youth for Tax Justice Network. You can be sure to follow us on our social media platforms. We've been sharing some sneak peeks of this conversation on our social media platforms. So please share with us. And then I'm seeing someone asking for the presentations. I hope Gabriel, you can be able to get the presentations and share with the participants. And yeah, most of the other questions I see have been answered, and I hope we've had an informative one. On this note, I would like to close this webinar, and let us keep in touch. Let us keep the conversation flowing, and we shall be in touch. Thank you very much, and goodbye.